Hello friends, so today, this is Shreyash as my son, and son and dad will be talking about finances today. Okay, so this is an episode on teaching kids about finances or financial education. So in that series or playlist, we will be discussing multiple things. So today we are discussing about debits and credits. Okay, so what are debits, what is credit, and what is a debit card and a credit card. So these are basic things every kids or every individual should know as well. So let's start with asking Shreyash if he knows anything or he has heard anything about debit and credit. Have you heard about?
I've definitely heard about it.
Okay.
And my prediction is that a credit card is when you spend money and then it doesn't directly get out of your bank account. There's a time limit of like 1 month, and then in the time, like how much money you get in that process, you like, I messed up.
Okay, so let's explain that then. What is debit and credit? Okay, you tried really well. So debit and credit, this is accounting term. Okay, so what is accounting term? What is accounting? Accounting is a recording of your incoming and outgoing. Okay, or appreciation and depreciation is called recording of that is called accounting. So if you want to be an accountant, are you going to be an accountant? No, you don't like accounting. Okay, so accountant, so this is the basics of accounting. This is debits and credits. So when money comes in to an account, okay, that is called a debit. Okay, so that account gets debited. Okay, so and when money goes out, that account gets credited. What is an account? That means let's take for an example, this is a piggy bank, small little sort of a pot you have. So you are putting money in into that pot or into that piggy bank, so that is you are debiting. Okay, when you take out, it's crediting. Okay, so that means there is a way you can find out, okay, how much is left. So if you have let's say 10 pounds in that pot, and you added 2 pounds and you took out 1 pound, so that is the accounting itself is 10 was the opening balance, added 2, that means that becomes 12, less 1, so the deduction is a credit, addition is a debit, and that's how you get 11 pounds. You get it? Debits and credits. So now debits and credits, you understand, in a banking term. Okay, when we are talking about a debit card, that means when you have account. So in the piggy bank, you have money inside, and let's for example you have 10 pounds. A card you are given by a bank, and the card enables you to withdraw money from your account. Okay, so the debit card means you have a debit balance. That means you have amount there. So 10 pounds, you can use that card up until you spend all the money. That means 10 pounds. Okay, so that means if you do not have money, if you have only 5 pounds, can you spend 10 pounds? No. So in a debit card you can't do that, but in a credit card it is different. Okay, so in a credit card, what happens, as you said as well, so credit card is a credit. That means you are taking the money out, and when you are taking the money out but you don't have money in, how can you take the money out? Okay, so let's take for example you have 0 balance. Okay, though you don't have any money, but can you withdraw, can you take out from that piggy bank 10 pounds? No, it's not possible. So that is where credit card comes in. Credit card is just like a loan. Okay, so credit card is a loan. Who gives you that loan? Whoever, exactly, whoever gives you that credit card, so that means if you apply for a credit card with a bank, let's say Barclays Bank, HSBC Bank, American Express credit card, so that financial institution, they give you a loan. Okay, so if there is a loan, then do you have to pay it back?
Yeah.
Yes. So that means they are in the business as well. They want to make money. So that's why. So how do they make money? Banks, how do they make money out of your credit card?
So I don't know really.
They charge interest. Okay, so you have to pay interest because they give you money. They said, okay, interest. That means you have to. If I am giving you £100, they said, okay, I will be charging 1% interest. That means you have to pay me 1% in a year. That's an example. But credit card interest rates are much higher. Let's say 20%, 25%, 30% as well. So in a year, if you keep if you do not pay for a year for £100, you have to pay. If the 30% interest means £130. Okay. So that means you should not get into credit. Okay. This is like a loan. If you have money in your account, you should pay it from your account. Or if you are going to use that, okay, that money, let's say for example, you are going to pay £130 interest, but that £100 what you have taken out, you can use it to make £150. That makes sense, isn't it? So here you will be paying £130, but you can use it somewhere else. You make £150. That makes sense. Okay. So what is a credit card then? So first the bank gives you a loan. That means first you spend it. Okay, even though you don't have money, so that means it does not check your bank account details to find out whether you have money in their bank account or not, because it's a loan. So that means the loan means it's a credit. Okay, they are called creditor. Creditor means you have to pay them. Creditor. Okay, so there is in accounting term that is called a debtor and a creditor. Debtor. Debtor means where you are going to receive the money from. That's called your debtor. Creditor means where you are going to pay them money. That's called a creditor. So that's your debit card, credit card. You understand that, okay? Okay. Now, when you you must have heard about something called a credit rating agency. Have you heard about it? No. Okay. So you'll come across it. So those of you who are haven't heard, credit rating is an agency as well. They give you loan. Banks give you loan based on the credit rating agency they refer. So credit rating is what? Is a credit. That means when, based on your history, whether you have paid all the loans, you have settled all the loans or not, based on that, there is something called a credit rating agency. They rate your, credibility on finances, based on that they give you loans. So debits, credits, debit card, credit card, you understand that?
Yeah.
All right. Okay. So with that, we are done. So please look out for the following videos as well. We'll be discussing a lot about finances, teaching kids about finances so that they can be better off in their future when they know how to manage their finances well. Okay. With that, we are done. My name is Som Prakash, and you are?
Shreyas.
Okay. Bye-bye.